What's going on, everyone? Happy Thursday. So my name is D. Anthony with evolutiontraders.com. What we're looking at here is a nasty day in the market. So, it's to be expected, right? All of 2022, we've pretty much had a down year in tech overall, and some of the smaller and mid cap stocks, have had a bad 2 years. But, if we kind of come to present day and look at exactly what's going on, realistically, since the beginning of November, we've been stuck in a channel, right? Top of that channel, you can see being outlined here, 1, 2, 3 attempts to try to break this channel line here. This upper supply is the 150-day moving average. The highest that we touched was kind of 3 days ago at 296.88 before we were rejected on a little bit of a gap down here. Now, we did lose all of this initial demand here, the 20, the 10, the linear regression, the 5-day moving average here. You can see today on today's little bit of a gap down that we had below yesterday's lows. And I was kind of telling people in Discord, if we start to lose these lows here, we've got some room down to the 50-day moving average. Now, today's low or yesterday's lows was 283.15. Kind of opened up a little bit below that, pretty much been nonstop selling. The triple Qs is down 10 points on the day and 3.5%. This is not anything, insignificant. This is very, very, a very, very big move. Now, does that mean that the market's going to all the way to zero? Does that mean that, we're never going to have another green day? Of course not, right? There's always going to be dead cat bounces. There's always going to be areas of opportunity where you can take part of moves, whether that be to the long side or whether that be riding those shorts or put options to the downside. But what I kind of want to outline here is that, as it stands, if the NASDAQ 100 closes here, it's not a good thing. And the reason why it's not a good thing is because this would now be losing the 50-day moving average ever since we kind of reclaimed that 50-day moving average almost a month and a half ago. So you can see this big gap up that we had here over all of this supply. Normal price action buying pressure could not get us over. Overnight futures and those boys in the futures market kind of helped us out with this, where we had this gap down from what looked like death here on the 9th of November. Had this big gap up here on the 10th of November, kind of closed over that 50-day moving average, had a little bit of a 4-day run up, followed by a back test, followed by some distribution for about a week and a half, followed by this monster pump that I know everyone remembers from the 30th of November. Had that initial monster pump here, and this was actually looking like it was getting ready to set the tone to kind of break out towards that 200-day simple moving average. Now, if we would have kind of reclaimed that 200-day moving average, things would be looking very, very different at this point in time. You obviously know, if you've been around the trading game for a long time, the 50-day moving average and the 200-day moving averages are kind of like the granddaddy masters of them all. You really can't be full risk on when you're trading below the 50-day moving average, and definitely not looking to swing trade long if, we're not over the 200-day moving average. That's just kind of a rule of thumb that goes for a little bit longer term investors and swing traders. You're really not looking to swing trade or hold stocks long term if we're trading below that 200-day moving average. The closer we get to the 200-day moving average, you want to be taking profits if you have been. And just getting that break and retest of that 200-day moving average. Now, you can see going back 3 days ago where we had this little bit of a gap up, we actually put in this high where we kind of took out this consolidation, looked very, very good, but was immediately rejected by a big selling pressure here, 297.03. Again, 200-day moving average is sitting at around $302.71. Now, market's continuing to push down right now as we look at this live, currently 11 a.m. Pacific Standard Time. This close here, not good. We've got a huge gap to be filled here. If you kind of look at when I'm talking about gaps, I'm talking about, look at the amount of room here below this 50-day moving average. Okay, so look at how long we've been holding this. We've been holding this whole channel here going all the way back to the 10th of November. If we close below this, all you're looking to do is take your tech stocks or the triple Qs ETF, anything below today's lows, currently 275.62, and short this all the way down. Now, we do got room all the way to 261, 262. Not saying that it has to come down here, but being that we have breached and broken this channel level, this previous resistance, if we kind of go back here to September, we go back here to October, you can see this previous resistance, okay? This previous resistance here, this here and here, when we finally broke out for a month and a half, acted as support. Now that this support here, which is this 50-day moving average, has been broken, we have a lot of room down. I don't care what you say or what you think. Now is not the time to try to be a hero. Now is not the time to try to say, well, we're overextended on selling pressure to the downside. Let me just try to bounce stocks here. And if I do, I've got a great entry. The moment you start thinking that is the moment the triple Qs in all of tech stocks is trading at 261 within a matter of a week or 2 weeks time. Okay. Be smart. Play the price action. Again, right now is not a time where you want to be risk on and swinging stocks overnight. There's a time and a place to kind of do that, and right now is not the time nor the place to do that, okay? So why is the market going down? Market is going down. I don't care, it's not about what Jerome Powell said. It's not about, what CPI numbers are or what we're expecting or this, that, and the other. Now, do those things kind of play a factor in the price action? Yes, but from a solely technical standpoint, okay? And I am just a technical based trader. I don't really keep up with the news. And, I hear the news coming in. Of course, you kind of have to know what's going on. But for me, I'm solely a price action trader. So regardless if the news or anything going on in the economy is good or bad, it still has to confirm my technical levels. I hope that makes sense. So regardless, if we get a complete flip here, let's say, for example, I'm going to paint you a nice little picture here. Let's say there's some news that breaks away and Jerome Powell says, you know what, he's going to start the tapering process and we're not raising interest rates anymore. Okay, boom, market starts to explode. Now, if in order for me to want to go long, what I'm going to have to do is analyze this from a technical standpoint. Okay, now that we've lost this 50-day moving average, we've got this good news here. We're starting the taper process. Market is extremely ripping. I'm going to look at this as an overshoot of backtesting the 50-day moving average and a reclaim. So what I would need is a reclaim close over the 50-day moving average. I would need to wait one more day. And as soon as we take out that previous day's high over the 50-day moving average, boom, that's my key signal to go long. Unless we're doing that, I cannot be thinking long. Now, are we going to get some short-term bounces, some intraday bounces on the intraday timeframes? Of course we are. Is there going to be opportunities to kind of make some money on the long side intraday on some scalps? Of course there is. But the overall macro picture now, if it stands as it is now at $276 on the triple Qs, this market is going lower and a lot lower, meaning we could potentially be backtesting 260 to 262 very, very quickly. Now, being that we did hold this whole level of chop zone here, this whole range here from about 295 down to this 278, this 20-point range that we've been in has just been a complete chop fest. Now, for the last month, the only way that traders were really making money is you are buying calls at demand. You are selling those calls at supply. You are shorting at supply. You are buying those positions back up middle, bottom half of the range, and you're just rinsing and repeating the whole time. Now, it's not until you break through one of these levels is when you can kind of get more clear sense of direction and then kind of take those bigger positions here. So what I'm looking at here is a break of this 1 month distribution, 1 month consolidation. Okay. Previous resistance, new support did not hold. Now we're finally breaking down here. I will be looking for this to backtest 261 at any given point. That also means that the stocks correlated and tied into the NASDAQ 100 are going to also be taking a tumble as well. Does that mean we don't bounce? Sure. Maybe we bounce tomorrow, but if we do bounce tomorrow or next week and we do not close, meaning reclaim this 50-day moving average, the bias is still short. Now, if we just overshoot this today and then we reclaim this 50-day moving average, let's say tomorrow or next week, we are still going to need to wait that one extra day or extra few days to see can we take it out. Just because we close back over the 50-day moving average doesn't mean, okay, yeah, we lost it, now we reclaimed it, time to go back long. No, we're going to need some confirmation. That's going to require you to be a little bit more disciplined, a little bit more patient. But again, guys, this is your money you're playing with here. This is a real marketplace that we're in. This is a real business and a business that makes a lot of money, right? So we want to make sure that we're tactical. We also want to make sure that we're disciplined, and we also want to make sure that we're smart, right? At the end of the day, we do not want to be a bunch of bozos out here just kind of throwing our money around like, throwing a plate of spaghetti on the wall and hoping that it sticks. I hope that makes sense. Right now, my personal bias is short. I'm going to be looking to short the pops at at supply zones, using those highs as my stop loss, my max pain, whatever you want to call it. And I'm going to look to short through the lows. Those are the two setups that I'm looking for. If I'm looking to go long, it's got to be something very, very quick. And I'll give you a quick example of what I would be looking for on something on a long position, right? Or a long trade here. This is a 5-minute time frame here. For me, if the NASDAQ 100, which is a triple Q's ETFs, kind of reclaims this 20-day moving average here, let's say we reclaim it over 276.56, I know I've got room into 277 and 277.50. That's about 50 cents to 75 cents before my next supply zone. What I would do is let it close over the 20-day moving average here on a 5-minute time frame. I would wait for the next candle to confirm and or a back test of the 20, and as soon as we push higher or confirm the high, I'm going to take bigger size and I'm going to look to get that 40 cents, that 60 cents, that dollar move very, very quickly. I'm talking 2 minutes, 5 minutes, 6 minutes, 10 minutes. And then I want to get out. I'm not saying that I'm looking to, we closed back over, a 5-minute, 20 period moving average. And I'm looking to take this back to the promised land all the way to highs. No, that would be considered a scalp move. That I'm just giving you guys an example of how you can play the dead cat bounces intraday. Example, here's another one here. Over 277.39 is over the 50-day moving average here on the 5-minute time frame. Over 277.39, over $278. There's room to 279.34. That's exactly how I'll play it. Anything over this 50-day moving average, I will get long on a confirmation candle, and I'm going to look to take that $1.50 move, be in and be out. That's how you play pops in a downward market. It doesn't mean that you buy calls over 277.39 with a weekly expiration contract and you buying 285 strikes. Okay, you don't do that. You're buying in the money, you're buying at the money, you're looking to get that 50 cents, that dollar move on bigger size, and you're looking to get right out of that trade. Now, if you're looking to just play the trend and kind of go with the overall market, anything below 275.67 obviously has that bigger room down. You would look at the bigger time frames to kind of see what we're doing here. You can see multiple hour red candles here ever since pretty much the pre-market. 1, 2, 3, 4, 5, 6, 7, 7 red consecutive hour candles in a row. So could we be looking at a bounce? Sure. If someone was looking to play the bounce, here's another way you can do it. There's so many different ways to play this, right? Use the lows, right? Today's lows, 277.67 as your stop, right? So what I would do is I would put some little line here, a little trend line here, and kind of, for visual, right? Because I'm a very visual person. If we break below 275.67 and we close below, my trade's over, okay? For me going long, me buying calls, that trade is over. Now, if I attempt to buy calls here, this is your technical stop. So you already know your risk going into this. You might have to sit through a little bit of drawdown. You might have to sit through some chop and make sure you give yourself some time. I would not buy weekly expirations. I'd go next week's expirations. You have a little bit more time. What I would really be looking for here is to take out the previous hour's high. 277.90, that would be taking out this 5-day moving average on a 1-hour time frame. And from here, that 277.90, that 276.90 and that 277 has room higher. 279.61 is our next level of supply. So if we do break this, I'm going to look to take profits on the way up. I'm not looking to get in calls here and think that we're coming all the way back here. So one thing I want to kind of emphasize and stress to everyone, a lot of people think that, well, I'm going to try to time the bottom down here, and I see that yesterday we were trading up here, so maybe I'm going to buy 285, 286, 290 calls. No, that's ludicrous. That's not what you do. You don't do that. You buy at the money, in the money calls. You look at your technicals, look at your technicals here. 5-day moving average. This is a power trending SMA. So if you would like to know your power trend, put up the 5 SMA on any time frame chart. You will see the trend. If we do break trend, meaning we close over the 5 SMA on a 1-hour time frame, I'm going to look for the close, and then I'm going to wait for the next hour candle, right? Be patient. Again, guys, this is not a race. This is a marathon. Be patient. Close over the 5 SMA, wait for the next candle to dip consolidate, do whatever it needs to do. And as soon as we take out those highs, I'm going to get long, and this is where I'm going to be selling into this move. You can see we got a nice gap to fill here between the 5 and 10-day moving average. But again, the last thing I'm going to do is wait for this to confirm, get long, be green, not sell and take any profits, and allow it to run into the supply, chop around, and then come back down and break through lows and me lose all my profits. Guys, I hope this video is informative and helped. And if it does, make sure to like, comment, and subscribe. Join the Discord. That link is down in the description box below. My website is evolutiontraders.com. My name is D. Anthony. If you guys would like to trade with me and the rest of the crew, make sure to check out everything down below. And I will see you guys all in the next one.